Hello, my name is Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited, and here is your daily technical analysis of foreign exchange markets.
Euro-dollar. An indecisive spinning top yesterday that could also be seen as a possible hammer pattern. This coming after the previous session's key reversal down and bearish engulfing pattern. In essence, the market continued its decline from the start, but there was hesitation towards the end. And it wasn't hard to see why, as prices dipped into a congestion zone that basically contained all the moving averages, which ranged from 108.79 down to 108.37, plus the 50% Fibonacci line for 2023 at 108.64. Looking overhead, we have the important 50% Fibonacci line for the January 2021 to September 2022 move at 109.44. This had been a good capping resistance in recent days. Further up, we have the broken green highlighted lower bull channel line, currently 110.09 of the October 2023 to late January 2024 bull channel. This has also acted as an overhead capping action. I'm still wondering if the market will continue trawling along the underside of this lower bull channel line. Meanwhile below, well, we have the congestion below, but nothing to write home about until the May 2023 low at 107.66 and the more important April 2023 low at 107.25. So far today, we're literally not much, but now we're testing down lower to the long moving average as this market is still stuck in this viscous area controlled by the moving averages. It'll be very interesting to see what happens there at the long moving average. Cable, aka sterling against the US dollar. A hammer pattern yesterday as the market initially tested down the lesser Fibonacci line at 127.21 and into the previously mentioned general congestion zone formed between December 2023 to January 2024 from the 126 area up to 127.75 area, and even below the lower time, which is currently at 126.99, highlighted in dark blue of my daily chart of the broken November-December 2023 shallow bullish pitchfork and its reinforcement, the short medium moving average. That's currently at 126.87. It went down through all of these, but finished back up, just under the lesser Fibonacci line at 127.21. And with the surprising short moving average, currently at 127.29, still capping it for a second session. Overall, the market exited from for the first time, but did not close below the lower time of the broken November to December 2023 shallow bullish shift pitchfork. I do not think that this will be the only time the lower time will be tested. Further overhead, we have the November 2020 low at 128.52 and the declining bright red highlighted July 2021 today downtrend currently at 128.50. This downtrend is still the one to watch. Meanwhile, further down, we have the recent February-based uptrend currently at 126.53 and the paralleling medium moving average currently at 126.34. So far today, another attempt lower, trying to push down through the lower time again and the 50% Fibonacci line of the June 2016 to September 22 move at 126.99. Euro sterling. An indecisive spinning top pattern yesterday after the previous session's combination of a counter to the counter bearish dark cloud cover pattern and also a possible shooting star pattern. The finish ended up with, once more, a close back below the combined December 22 and December 23 lows at 85.45 and 85.47 respectively. The top side was capped, unsurprisingly, by the oft-mentioned declining short-medium moving average, currently 85.53, though it was penetrated like the previous session. We still have further recent congestion running up as far as about 85.75, though continue keeping an eye on the short medium moving average, as its capping influence has been seen here since mid-February. Overall, the market is still within the breach but not broken purple highlighted late January small expanding wedge pattern, currently 85.27 to 86.13. In the recent progress of moving higher, the market left behind a similar pipe bottom in March to the one seen in mid-February, leading to speculation that it may have a larger double bottom pattern formed with these pipe bottoms. More on this should it develop. A little lower still, excuse me about that, a little lower still is the bright red neckline of the May to August 2022 Head and Shoulders continuation pattern, currently at 84.99. This is a further significant support. Overhead, beyond the short medium moving average and the recent congestion running up as far as about 85.75, well, we seemingly have little until what looks like some heavy duty congestion formed from the crossover of the upper trend line, currently 86.13, of the purple highlighted expanding wedge pattern, the dark blue upper time, currently 86.04, plus the recent dead cross of the medium moving average, currently at 86.01, down through the long moving average, currently 86.06. So far today, a reactionary move. Yes, I know, yet another reactionary move. A reactionary move back up, pushing over the December 22 and December 23 lows, even over the declining short medium moving average. But once again, running out of steam as prices drop back below the December 22 and December 23 lows in the 85.45 and 85.47 zone. US dollar against the Japanese yen. A sixth bullish white soldier yesterday that made a strong move higher up through the somewhat surprising, slowly declining short moving average, currently at 149.34, and the congestion from late February between approximately 150 even to 150.75, finishing up just over it, but below the peak set back in November last year at 151.92. Remember that number. Looking below, we still have the near-term support of the rising short medium moving average, currently at 148.46, highlighted in green on my daily chart. Whilst on the top side, beyond the November last year's high, we have the middle time. Yes, the middle time, currently at 152.53 of the July to December 2023 bullish Andrews pitchfork, which is highlighted in bright red on my daily chart. This is all still a follow-on higher from early last week and late the previous week's three-day bullish morning star pattern. Looking further below, we have support from the combination of the lesser Fibonacci line at 146.33 and the slowly rising long moving average, currently at 146.60, as well as closer in from the flatlining medium moving average, currently 147.49. Top side, well, it all gets quite interesting now as we approach the November peak and the red middle time just above. Apart from the bright red bullish Andrews picture, we also have the larger February 2022 to January 2023 bullish shift picture highlighted in purple on my daily chart. We're in between the lower time below, currently at 144.27, and the middle time above, currently at 158.35. So far today, another strong break upwards, up and over the congestion between 150 even to 150.75 and up towards that peak. Peak up at 151.92 that was made back in November. US dollar against the CNH, the offshore Chinese yuan. A sixth of bullish white soldier yesterday that punched through and closed over the recent mid-February to date downtrend, currently at 720.63. I previously said how this market looked like it had elements of a three-day advanced block pattern. Well, I'm prepared to call it that, a three-day advanced block pattern. Hard prepared to say it, and when I actually say it would be a good idea. The advanced block multi-session pattern is traditionally seen as a bearish reverse. However, data indicates that close to 6 out of 10 times it acts as a bullish continuation pattern. This time, the market followed the data rather than the tradition. It was also another move closer to the lower uptrend, currently at 721.76, of the dark blue highlighted mid-January to date ascending triangle pattern, currently 721.76 to 723.61. Now, last week I laid out some ideas for potentials below for breaking out of such an ascending triangle pattern. Thus, a primary target X is down in the 716.05 zone, with a secondary hardest reach target X1 down in the 710.70 zone. The opportunities lower are now rapidly diminishing, as we now have all the moving averages but the long moving average as supports, as well as the May 2020 high at 719.64. Meanwhile, the top side has a lot of resistance in the way, though prices have waded up through that, and the only ones left now are the two dark blue trend lines of the ascending triangle and the slowly rising long moving average, currently 722.81, that sits in between them. So far today, a further attempt higher, but getting capped by that lower dark blue uptrend of the ascending triangle pattern right now. US dollar against the Mexican peso. What looks like a shooting star pattern yesterday, but it gave no immediate clues as to whether it was the more common bearish type or less common bullish type. The base of the action was the neckline extension of the February to April 2021 head and shoulders top, currently at 1678.34, with the market rising up to pierce both the middle tie, currently at 1688.08, of the dark blue December 2023 to January 2024 mildly bearish shift pitch walk, as well, and more importantly, I suspect, as the support now turned resistance at 1688.97. This congestion at 1688.97 was formed in mid-December 2015 and more recently featured in mid-August and late December last year, so it has some pedigree. However, prices did not flow once over 1688.97. We ended back down. We ended up back down just over the neckline extension. Looking higher up, there is the flatlining short medium moving average, currently at 1701.13, and then the April 2016 low at 1703.89, which is also the gateway to some recent February based congestion up to the March 2016 low at 1709.23. Meanwhile, below, we have some congestion between 1670 even to 1680 even from August last year, as well as the 2023 low at 1662.11. Now, so far today, well, pretty much indecision, as I suppose the market still can't make its mind up if yesterday's shooting star was a bearish one or a bullish one.
Thank you for listening. This short version broadcast gives essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and the back of this broadcast. Copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final important bit.